3, 2, 1.
Okay, the last couple of days have obviously been very exciting in the cryptocurrency space and the broader macro world. In Bitcoin last week, we had a massive drop in price from 7,800 right down to 3,600. The biggest single day drop, I think on record, at least going back to 2013. Doing some forensic work, it looks like derivatives exchanges were a big part of that. Deribit and BitMEX, BitMEX had $840 million in liquidations, I think, at that time. And the price drop didn't really stop until those guys put themselves in timeout and took a break and let price come up. So that's one of the things I want to talk about today. But obviously, we've got a lot going on in the broader macro world. So maybe we do introductions here quickly. So we've got Dan Clark with us today. Dan is an advisor with Delta. He's got 20 plus years in financial service experience. And what probably feels like 200 to 300 years of experience in Bitcoin.
Yes, indeed.
And Pankaj Balani, who is the CEO and co-founder of Delta Exchange, which was an up-and-coming crypto derivatives exchange based in India, but serving clients all over the world. Before we get started, don't forget to hit that like button, subscribe. We've got referral links down below. They're for Delta and for Max. They're both from my account. So go ahead and use those. But yeah, let's jump into it real quick. So what do you guys think of this kind of broader macro situation that we find ourselves in here? I think it's really like what people in Bitcoin have been, expecting for a long time. So what are you guys thinking here?
So Dan, you want to start off?
Okay, yeah. I mean, it's amazing how quickly we've gone from, 4 weeks ago, not even a word of recession, to now even my brother calling me, telling me we're going into depression. My brother was telling me how many BMWs he was selling just 2 weeks ago. It's record start to the year. They were up 50% year on year. They've even had a great beginning to March. So I think most people on Main Street don't kind of realize what's coming, which is kind of scary. I think the other thing, though, the thing that really is playing my mind right now, and this is a question really for both of you, and one I haven't really got my head around, is this sort of deflation versus inflation scenario, which is gold is getting hit very hard early on in the crisis, which is typical, 08, I think 2001, 2008, it was down 15 to 30%. So, that's why when Bitcoin's down 50, 60% versus say gold down, 15%, it doesn't seem that ridiculous to me. During the liquidity part of the crisis, where people just want to sell what they can, not necessarily what they want to. So the question, I guess, is if you're going into deflation, QE1, QE2, QE3, we all hoped, or the government certainly hoped, that they could spark inflation, which would then reduce the debt, blah, blah, blah. Every single time it failed. So do people think that this time around, throwing how many trillions of dollars at this problem is finally going to spark inflation? And if it does, is that going to be off the charts and be very good for the likes of Bitcoin and gold? Or are we firmly into deflation? There's no way of fighting it. This is depression era economics. And how does Bitcoin play in that? I can see a scenario where, in the worst case scenario, if you've got the depression type scenario, Bitcoin could do quite well because it's a system that doesn't rely on any intermediaries, and it would be a useful way to be, particularly if this becomes a banking problem. At the moment, Goldman's has recently done a client call that said, no, there is no banking problem right now. No one's talking about a banking crisis. So hopefully that stays true. But if it turns into a banking crisis, then I think, yeah, Bitcoin is very good in that sense. But anyway, yeah, open it up to you two. I'm sort of going round in circles on this.
The other beneficial thing for Bitcoin in this situation is the war on cash and demonetization, how I think that's going to escalate. You see us globally cutting interest rates, 2 emergency rate cuts in the States, back to back. That's fairly unprecedented. So, we've been talking about that IMF blog report, I guess it was last year, or maybe the year before, about how to make negative interest rates work, where they basically laid out the plan, and they said that cash is the problem. You've got to stop cash before you can implement negative interest rates. The Reserve Bank of New Zealand had a comment on that yesterday, saying that they need to adjust their cash system to make negative interest rates work. So I think we're definitely going to see that. We're going to see countries that are imposing more restrictions on how much money you can take out, what you can do with your cash. And it's those kind of situations that I think Bitcoin, like the Cyprus haircut, Grexit, that kind of stuff, those kind of situations are previously when Bitcoin has kind of looked like a safe haven. I think that's why that term safe haven comes up with Bitcoin, because when there's restriction on capital flows, that's when it shines as a safe haven type asset. And that's why it outperformed during the first Chinese yuan revaluation and recently when we broke 7 again with the CNY. So, that should be favorable as well. And it all plays in together, I think.
So I agree with that completely. If we do see any kind of issues on the banking side and pertaining to cash and cash withdrawals and money not being able to transferred in a particular amount, that usually sends a very negative sign to the customer, and that will definitely spark a rally in Bitcoin. But I think there's a lot that will unfold before we get there. And unlike the '08 crisis, where people were expecting a recession, some for 3 years, some for 2 years, most for like towards the end of 2007. They were quite sure that something's going to come. And it played out over 9 months. Bear Stearns went down in March, and then gradually, and till Lehman went down, people were like, okay, we'll still bounce back. And only when Lehman was hit, people realized, okay, this is much, much, much more serious. This has been a very different crisis. About 10 days back, it was still a supply crisis. That, okay, this is a supply-driven thing. This is constrained to China and probably one region in China. So let's just look at companies that are going to get affected in that supply chain, and the rest of the world can be fairly immune to it. It was
they missed the demand shock. They missed the demand shock aspect of it.
Absolutely. So the whole, the speed at which it hit Europe and the speed at which it hit US, and now these two geographies are big part of the world GDP. Yeah. So now there's a bigger problem, and it's all changed in literally 10 days. I remember like 10 days back, I was doing another podcast where I was saying, this is a local problem. Markets have already factored in 5-7%. So it's all good.
Be careful listening to Pankaj's prediction here.
Yeah. But I'm eating my words. And this time around,
nothing to see here. It's going to be fine.
Well, you can see it. I mean, I did a Chinese video, I forget what it was, but it was I feel like it was pretty early. And you could see it in the BDI had crashed, oil price had crashed, the Aussie dollar had crashed. Australia feels like they're just going to get smoked on this after the fires. The complete demand shock from their biggest client for all their iron ore and coal and whatever and everything they dig out of the ground, and tourism gone with the coronavirus, and just coming off of a housing bubble. I mean, they're in a tight spot.
And a banking system that's hugely leveraged into property. Ooh.
Yes. And it's not just Australia, right? Look at every country. In 2007, every economy was doing well, and then there was a crisis. Now here, markets were doing well, but underlying economy, people were still not so sure about. And then there is a crisis in which markets have started to collapse. So when I look at home in India, our GDP was already on the way down. We were growing at 8% 2-3 years back. We are growing at 4%. And then you have a crisis to, add on to that. Australia, you just spoke about the fires and what's happening with the commodities. Right? China has its own concerns. Of course, that's where most of the impact is going to be. US valuations were too high, and then there is a crisis. And, not the best time for Saudis and the Russians to go on a price war on oil. So, it's just multiple things. And I think that's how markets are feeling as well. Nobody really knows how to assess the impact on this thing. Is it going to be a 1 quarter thing? Is it going to be a 2 quarter thing? If it's going to be a 2 quarter of lockdowns, then what is the impact on earnings? Because I believe at least 1 quarter of earnings are washed out, and we'll see serious numbers. I was looking at unemployment data in US, and it's like 4 times of what it used to be on a weekly basis in some states. So that's just people are not going to go out. There's shutdowns. They won't be spending. You have no idea how is it going to hit the companies, and which companies, which sector. Fed has come out and given money to the bigger banks, but that's not where the problem is. The problem is in the smaller sections.
The real economy, right? Not like the financialization part. But I think one
Yes.
thing that's very different this time around is that we have a US election in November. So
Yes.
normally my attitude would be that the powers that be don't really care, right? So they'll bail out the banks, they'll bail out Boeing, they'll bail out all the big guys, and just like they did in 2008. But this time they can't do that. There's a greater degree of accountability because we've got an election in November. And I think there's already, there's already a groundswell of interest in things like UBI, in forgiving student loans. So there is zero public appetite right now for bailing out the banks. So I don't think that can be done.
I think if they went ahead with like the Yang Gang's UBI, and then did a force all these companies that were issuing debt to do buybacks, force them to sell preferred shares at steep discounts that are very painful to existing shareholders, but the government holds those on their books and then uses that money as the economy recovers to pay for some of the bailout. I think that's perfectly palatable because you just need to screw these companies hard, and you can do that by forcing these companies to sell you all that equity that they've bought back at crazy preferential terms.
Well, the buybacks are another part of this, right? Like I saw a headline on Bloomberg that said American airline industry, 96% of their free cash flow over the last 10 years went into buybacks. That's a wild statistic. Yeah. That's a wild statistic. And so now you come and, everyone from casinos to airlines wants a bailout,
Yeah, there was a reason it was legal before 1982 and probably should.
Right?
I think, it was Reagan that legalized it, but it's probably in hindsight, it's weird how people abuse it.
Yeah.
But,
right. Well, going back to could you give us an intro, maybe Pankaj, on who Delta is and how you guys, because I think you guys have a really, really strong team. Where you guys, your backgrounds, and how you got into this crazy world of crypto derivatives.
Sure. So we are a derivatives exchange. We focus on crypto derivatives, and we have futures and perpetual swaps listed on Bitcoin and about 32 altcoins now. We have the largest selection of underlyings globally, as in coins listed on as in futures listed on largest number of coins. I think there is one or two exchanges that come close to us. Binance has now offered a few altcoins, but we remain ahead of others as of now. We've also started to offer options recently. We offer move contracts, which are daily straddles on Bitcoin and Ethereum. Basically, like the name states, you can predict or you can trade on how much will Bitcoin or Ethereum move on any given day.
So they're directly agnostic. So it goes up or down, it doesn't matter. It's just volatility. Yeah,
absolutely. It's pure play volatility, and it's one of the best contracts to trade in this kind of environment where the swings are wild and you don't know what it is going to be tomorrow, but you can be sure that it's not going to be quiet.
Yeah.
So yes, we have move contracts, and we are the only exchange to offer move contracts on Ethereum. There's been good interest in those. We've started to offer earlier this month only. A bunch of things that we do are, we have a very strong focus on bringing different products to market. That's what we have done in our 18-20 months of existence. We started in August 2018. We were the first to bring BNB futures as early as December 2018. Nobody was even talking about leverage on altcoins which are beyond top 10 at that time.
Was that when Binance was still very anti-futures?
Yes, indeed. And, they are still, I believe. Because if you go and see BNB borrow on Binance, you can borrow coins on Binance, right? If you see the interest that you have to pay to borrow BNB, it used to be over 100%. Mm-hmm. Now I think it's close to 50-60%. So every other coin you can borrow for 8%, 10%, 12%. But if you borrow BNB, you have to pay 50% per annum interest because they don't want to lend it out. So we
love futures on every we love futures, just not on our coin.
Yeah.
Also Tether Gold. You guys just launched Tether Gold last week. I think that's really interesting. I've been looking at Pax Gold and Tether Gold for a couple of months.
Yes.
And the volume in them has been really weak. Like going back a couple of months, it was, just maybe tens or a couple $100,000 daily turnover. I noticed Pax Gold last week, or was it? I forget which one it was, but one of them hit 25 or 30 million. So they're trading, more than 10 million every day right now. So that's getting kind of interesting.
it's getting interesting, and yeah, interest is picking up in those contracts. If Pax Gold months now, and earlier, like you said, these things were trading about 100,000 on a daily basis. But the minute this crisis has hit us, we are seeing a lot of traction in this. Right now, we have XAUT USDT pair, on which you can trade futures with about 20x leverage. We are also looking to offer XAUT BTC pair. We will also list Pax Gold. And I think there's a lot of interest in both these coins. It clearly shows that Marcus has appetite for safer haven assets. And when you go into dollar, you don't have any beta in your portfolio. When you go into gold and environment is recessionary, then you still can expect some kind of beta in your portfolio, some kind of negative beta in your portfolio. So you might gain some. So yeah, we will see interest.
I think those kind of products too are how you kind of market this industry for other investors as well.
Jesse, your voice is muffling.
Oh, sorry. How's that?
Oh no, it's got all funny.
Is it? I can still hear some.
You sound like a Dalek.
Who, me?
No, Jesse.
Jesse.
I knew this was going too well.
Maybe just flick microphones to, or unplug it or something. This is fine. Come on, working from home and isolation. This is expected.
Yeah.
Yeah, I mean, you realize the infra is not ready to work from home, right?
How's that?
No, it's not. That's perfect. It's not great, is it?
Yeah.
No. Well, I mean, we're using Zoom right now, and Zoom has had a big run to the stock, right?
Yeah. All the video conferencing apps are in high demand now.
Yeah.
With everyone working from home.
Yeah.
And that's the strange thing about this crisis. You can't be prepared for this kind of a thing, right? I mean, when in corporates they do this kind of planning, that shutdown planning, and you look at all the scenarios and are thinking, what? When is it going to happen?
I was ready with the toilet paper, though.
Yes, toilet paper. That's another story.
So all three of us are from traditional finance, right? Dan and I worked together for 10 plus years in Taiwan at different investment banks. Where were you previously, and what did you do?
Oh yeah, so I was part of UBS Investment Bank in Hong Kong. Have done derivatives for about 8 years in my career, and traded pretty much all the Asian markets, both OTC and listed size on derivatives. Worked with the top hedge funds and was very lucky to be on one of the largest Asian equity derivatives desk. So have seen these things. Then I also set up a derivatives business for a London-based bank in India. So that was pretty good. And my co-founder as well. He also comes from finance background. 8 years in GIC and Citibank in India put together. So in the team, we have good understanding of markets, both interest rate side and equity side and commodity side, and across the globe.
I think that's fairly unique in this industry to have very senior people, at the top that understand markets really well. A lot of people come from the other side, from the tech side or the infrastructure side. But I think that's fairly unique and probably quite important to your kind of business for doing strategy, because you're doing financial services. I mean, essentially this is financial services. I think there's a lot of discussion on, are we doing tech or are we doing financial services? And this is financial services.
Yeah.
Reaching to the choir. Yeah. So
although I guess you're not dealing with fiat, so you're a little bit more insulated from that.
Yeah. We don't deal with
some of that bullshit.
Yes. So we deliberately choose not to deal with fiat, because once you get into the fiat world, there's a lot of other things that come into picture that you need to account for. And coming from financial services background, that what are there are multiple things that it will open up that you need to be compliant with, and it will just create a lot more burden on a startup.
Yeah. So, okay, I'm shifting gears slightly, going into what happened last week. So, it looks like that what happened was just a ton of liquidation. So I think I was going through wallets at different exchanges, and it looked like there was real money selling coming out of the particularly Western exchanges. So it looks like there was large inflows of Bitcoin, which means that people wanted to sell. And that makes sense, which what was going on in the market is, like Dan said, people just want to sell everything and cash out. Bitcoin is a great asset to do that because it's 24/7, very liquid, very global, and you can get out fairly easily. And then it looks like that exasperated liquidations on BitMEX primarily, and also Deribit and some of the other exchanges, just kind of driving prices lower. I don't think there was really anybody who really wanted to sell Bitcoin at $4,000.
Yeah.
I think people were forced to do that. So what happened last week from your perspective?
And then can you also just give us a take on, have these derivative markets become too big for this asset, for this underlying asset class? Like, is it, because some of the speculation was that if they hadn't have closed the engines, that it would have gone to zero. And it kind of was certainly feeling like that sitting here looking at the screen.
Well, it became like a circuit breaker, right? Like they imposed their own circuit breaker. They said they didn't do that, but that's effectively what happened, right?
Yeah.
Well, let's hear from Pankaj.
Looks like it. So, okay, there are 3-4 questions here. Let's take them one by one.
Yeah.
Market, how did the collapse begin? Everything was going down, and in times of shock, all the markets recede. So you saw equities going down, you saw gold going down, you saw Bitcoin going down. Now, our market particularly was sitting on a lot of leverage. And when I say leverage here, I don't necessarily mean just the longs and the financial leverage, but leverage in terms of, people had stopped selling Bitcoin into the halving. People were waiting for the halving, and the halving rally, everybody wanted to, kind of not sell Bitcoins and just hold the Bitcoin stock to be sold towards the end of April or something of that sort. We had seen miners sitting on ton of capacity of Bitcoin. Like last 6-8 months, they had stopped selling. Some of them were even leveraging their positions. So they were keeping these Bitcoins as collateral, and they were borrowing money and then, introducing leverage in that fashion, generating more Bitcoins. I know a couple of miners who had sold put options. I know a few miners who had basically, looked to convert as much cash. They'd basically gone extra long. They had spot and they had gone extra long in futures as well. So it's just that the system was really, really very bullish. And it's just that at that time we received a shock, which triggered selling. And like, Jesse, you said that this was actually cash selling. This was not just futures selling. Futures selling actually came late this time. It was triggered by cash selling. And then once that started, the whole thing started to spiral in. And we had about $1 billion of OI in just on BitMEX alone. When the price was 8,000, they had $1 billion in OI. Now that's a big OI to crush in these kind of markets, and when prices falling really fast. So yeah, once the price started to come off, once we had taken out 7,000, we took a nosedive and went to 6,000 within minutes. Right? Yeah. So that
how does this compare? How does this compare to the 6,000 to 3,000 move back in November?
Yes.
Was it November or December? Like, did we see a lot more volume trade on this decline, or was it? I haven't really haven't compared the two, but I'm hoping that on this sell-off we saw a lot more volume across the whole space.
So this sell-off, I think the volume was higher. I remember. Okay, when we sold off from 6,000 in November of 2018, we went from 6,000 to 5,500 or 5,300 very quickly, but we took a breather there. Mm-hmm. And then we went to 47, then we went to 41, 42, 37. It was in steps, but this one just went very fast. This was like
cascading.
There was literally no time to react. And I think to some extent it's right saying that it went on spiraling in liquidations.
Yeah, liquidation.
So cascade. One liquidation, so triggered another liquidation triggered another liquidation. And here is where, keeping enough margin from participants is helpful because you get enough time to liquidate them. Mm-hmm. So for example, BitMEX offers 100 Bitcoins of liquid, position size with just 0.5% of margin, which means that at price of 6,000, you will have about $30 to liquidate 100 Bitcoins from one customer, if they are using their maximum limit. and if they are sitting at cross leverage or highest leverage. So that is a little too high, in my opinion.
So,
And that, kind of created pressure on the system.
so what are the lessons here? I mean, like the CME has circuit breakers. The CME doesn't allow 100x leverage. Is the leverage too high in crypto? I think there was a while ago that BitMEX said their average is 25x, which is pretty high, right? So is there just too much leverage allowed? Do we need circuit breakers?
So, okay. Circuit breaker is a bit antithesis to our industry, right? I mean, it's a 24/7 asset class. If you put circuit breaker on Bitcoin, on BitMEX, do you have circuit breakers on other asset classes, other exchanges as well, like derivative, like Delta Exchange? It has to be a coordinated thing. It cannot be that your asset is trading in spot and it's not trading in futures. So those kind of things you have to manage, and you cannot just go and put in a circuit breaker and when the prices are trading somewhere else, because what are the prices that you are going to use for liquidations? So for example, the price that we use for our liquidation and what BitMEX uses for its liquidation, the spot price, comes from an average of Coinbase, Bitstamp, and Kraken, which are the three major exchanges that have BTC USD pair. Not USDT pair, not USDC pair, because they can be somewhere else. BTC USD pure fiat, right? Pure unrestricted fiat. So if you put a circuit breaker on your futures exchange, you should also put a circuit breaker on your spot exchange. So that means a lot of coordination between exchanges. So I don't think the industry is there yet. I think it's a bit of a wishful thinking to say that, look, we'll put circuit breakers. Because if we stop our market and other markets are still going on, if the cash market's still going on, we might even be risking the system. Because let's say the price is 6,000. We stop trading and price goes to 5,500. And let's say the margin requirement for each participant was, 10%, which means $500 on either side of 6,000. And if price goes below 5,500, and when you open the market up, you might see a lot of bankruptcies right at open. So yeah, again, these things we have to think them through before implementing them. How much time do you give participants to put the margin back? How much is the size of liquidation for insurance fund and others? What we can do, and what we should do rather, is as an industry, is first of all limit the amount of leverage that you offer on numbers like 100x. So on Delta Exchange, we don't offer more than $10,000 position on 100x leverage.
Yeah,
I think Binance is the same as well. 100 Bitcoins is a $500,000 position. That's a pretty big position.
Yeah.
So we have to, in my opinion, that's a pretty big position, because we are not talking about one customer. We're talking about many customers, and we are talking about high correlations, because when the entire market was sitting long and the prices just collapsed, each of these guys would be at a very high leverage, and we came from, the system would look to liquidate all of them together. So two things that we need to do is less leverage at higher position size. That already happens. As your position size increases, you are required to put more margin, and that is true for BitMEX, for Deribit, for Delta. But yeah, the base limit on BitMEX is pretty high. And the second thing we need to put is a market-wide position limit. Now, this is again a concept from traditional markets. Mm-hmm. So if you see traditional market, they have limits on how much the long or the short OI can be, right? And as a system, if we are not able to handle $1 billion of OI, then any exchange, now this an exchange can do in itself. If Delta Exchange says that, look, we are not entertaining more than $500 million of OI. If the OI goes more than that, then we will not allow people to take fresh position. If BitMEX says that they are keeping this limit at $1 billion, then in such an event, there will be less pressure on individual systems. So that is the second thing we can do. Third thing, as a system, what we can do, and each of the individual exchanges that they can do on their own, is have a participant-wide position limit. Say that each participant cannot be more than 5% of the total OI.
Yeah.
So these kind of things are again very common in traditional markets, and these are learnings that we can easily import rather than importing a blanket circuit breaker, which comes with a lot of other things. I mean, circuit breakers after this event shows that, look, it's good. But the point is that once you open a start circuit breakers, you will have to set multiple levels. You will have to give time to participants to put money in the positions that might get liquidated. You will have to coordinate with other exchanges where the spot is trading. Mind you that exchanges like NYSE CME, they have their own spot, right? So if they have a circuit on futures, they can have their circuit on their own spot as well. And that way they can prevent unnecessary liquidations. But when you're using spot from other exchanges, there's a lot more coordination that is required. So yeah, in my opinion, I think the first thing to do is control position size for each participant, control market-wide or exchange-wide position limit, that this is the max OI on a certain contract. Now, yeah, everybody wants more business, so nobody really wants to put that kind of a limit. But I think from a system risk point of view, those are important. And then the third thing would be to have a participant-wide position limit, at least in bigger contracts, that no participant can be more than X percentage of OI on certain contracts.
I think if you go through the comments on anything that BitMEX has posted recently, there's a lot of anger by users right now. So I think maybe, these changes have to be driven by users. So people will have to seek out those kind of, exchanges that have those kind of, processes.
But I read they've been compensating some clients directly from their own funds, not from the insurance fund. Is that right?
I've seen these emails shared by people on Twitter. So yeah. I mean, they have been clearly, people have got emails and they have been sharing that. That shows that there have been some kind of compensations. And I'm not sure why they would not do it from an insurance fund, because that's why an insurance fund is there in the first place. That any kind of such sharp moves, any money that could not be recovered by liquidating positions will be recovered by insurance fund.
Yeah.
So it's a fund that you create for any day, right? And it can't pour any more than what it did on 13th of March.
Yeah.
So
that's the rainiest of days.
How big is it now? 30? How big is it? 36,000?
I think 36,000 or something Bitcoin.
It did drop. I think it dropped by 3,000 Bitcoin. Didn't it?
I went to 33, I think.
Yeah, but I was reading numbers for CME yesterday. They have $100 million insurance fund. These numbers at the price of 5,000 will be $150 million insurance fund. So I don't think the losses were as big as, to cover or to bankrupt the insurance fund. And I am not in that camp which says that, price would have gone to zero. I mean, yes, price was collapsing. Yes, market was basically in a downward spiral. It was a whirlpool kind of an effect. But you expect buying to come in on multiple spot exchanges, and there were beautiful cash future arbitrage opportunities, right?
Yeah. So there was a huge gap with Coinbase, I remember as well.
Yeah. It was 3%. So we got a lot of our clients into these trades that, look, use your fiat to sell your Bitcoin and go long in, Bitcoin futures. And some of these trades have just converged in 3 days. It's made 3% in 3 days, 4 days. So yeah, those are really good opportunities in these kind of markets. And I know for sure that a bunch of big hedge funds are just doing these kind of trades. When the market is in premium, they sell their fiat, buy Bitcoin and short the future. When the futures are at discount, they sell their Bitcoin and then they go long in futures. And a lot of them are long Bitcoin now, Bitcoin futures now. And that's why you see that the discount is converging.
So how big is there's been a lot of growth this year in the derivative space. Like, when we first started talking to you, there wasn't I couldn't name 4 derivatives exchanges. It was like BitMEX, Deribit, and then you guys.
Yes.
And there's been a surge this year. There's got to be, if you look at CoinGecko, there's 20 or 30.
Yes,
so, the statistic we always say is that the derivatives market in traditional finance are 5 times bigger than spot. Where do you think that is right now? Are we there yet, or getting close, or?
So there's the question about volumes in crypto is a tricky one, right? Because where is the data? So I was looking at data, and Bitcoin. When you look at Bitcoin futures and when you look at Bitcoin spot volumes, they've started to become comparable now. At times, Bitcoin futures volume is even higher than Bitcoin spot volumes, and I'm talking about just including top 3-4 exchanges on futures side, BitMEX, Deribit, and I'm talking about just including top 3-4 exchanges on the cash side, Coinbase, Binance, Huobi and others.
Yeah.
So yeah, now it's starting to become comparable, but it's way short of where it can be. It should be at least 5 to 6 times the size of derivatives market on top of what the size of spot market is. And when you look at altcoins, this number is like altcoin derivatives don't exist there, right? This is very few minuscule trading going on. There's, we have some trading. Binance has some trading. Beyond that, I think FT Exchange has some trading. But yeah, that market is really, really going to grow 30, 40, 50 times in the next 2 years.
Versus when you started this in 2018, what has surprised you positively, and what is different than what maybe
I'm hearing
your
volume
original
issues
vision?
from you now. You might want to
Yeah,
toggle
Dan.
back and forth.
Yeah.
I think you just might want to toggle back and forth on volume. Sorry.
Hello.
Still Darlick.
Oh, okay.
All right, I'll move forward with another one here.
Okay.
Index referencing. I was going to talk about that. Last year we had some
Yes.
good blow ups around that,
Yes,
index referencing,
yes,
and that
yes,
showed how
yes.
important that is for a derivatives exchange. Do you want to talk about that and what you guys do that's maybe different than some of your competitors?
Absolutely. So again, index formation, super critical. We use that price to get the fair value of futures and to liquidate participants.
Hello.
So yeah, it's better than,
Hey.
it's clear. So yeah, we use index price like every exchange. When I say we means every crypto derivative exchange. And that getting that price right is super critical, because otherwise you'll liquidate participants at the wrong price. And if you remember the last conversation that 3 of us did, in that we discussed about this and how outlier method is not a good method to get the right kind of okay. So if you have 3 exchanges,
Weight it.
Yes.
Yeah.
You cannot say which exchanges should you exclude and which exchanges should you keep.
Yeah.
And November last year, I think Halloween market, something happens with markets, right?
This
At
one
least
was
2
Friday the
happen.
13th too, right? Like Jesus.
Yeah, it's super uncanny. So yeah, last Halloween 2019, there was a big crash on Deribit because they were using prices from Coinbase, LMAX, and 3 other exchanges, Kraken, Bitstamp.
Yeah.
And LMAX and Coinbase went into maintenance at the same time. So they excluded price of one, but they did not exclude price of another because they were using the outlier method. And this caused, the price that they used in their underlying to be 80% of what the actual price was. So actual price was around $9,000. They used 7,200 as the price to calculate the fair value of futures and liquidated positions. I think that day as well they had to compensate about 150 bitcoins. So yes, super critical, can be super risky for exchanges. A lot of work needs to go into how to build these indices, and we've spent a lot of time in this. The things that become important here are we getting the live price from all the exchanges? Is any of these price divergent? And if it is, why is that? Is it because of maintenance? Is it because of lack of trading? If it is because of lack of trading, then should we use the last traded price or should we use price from the order book? Is the exchange in auction? In that case, the exchange is not in maintenance, but not in trading either. And the order book is still updated. But the order book can be way far away from where the true price is. So when derivatives issue happened, Coinbase was an auction. And so you have to adjust for that. Then things like, is the trading frequency right? Is there a wick? If there is a wick, how do you smoothen it out? So Kraken last year had a wick where actual price was 6,000, but there was a trade for about $4 million at 4,300. So do you include that price or do you exclude that price? It's a huge quantity. You can't really ignore that trade. But at the same time, it's 20% away from the market. Yeah. So you have to use some kind of, smoothing on the price. And index design, again, I can't emphasize it more. It has to take into account all these factors. So let's take a look at BTC USD index on Delta Exchange. It will take prices from top 3 exchanges where BTC USD is traded. not BTC USDT, not BTC USDC, because there can be a day when USD to USDT is 1.7, 0.93.
Yeah,
I mean,
well, USDT, that happens about once every 6
twice
months.
a year.
Yeah.
Yeah. Same thing with USDC, right? It can
Stablecoin, they call
consistently.
it.
Yeah.
So
If
it
you-
seems like there's no perfect solution here, is there? There's like, and the last thing
Yeah,
you
but-
want, because if you came up with what you think is, oh, I've come up with this idea, this is what we're going to do, this is awesome, and then everyone else follows you, and then you don't want that either, because you don't want everybody to be using the same system when it fails, as systems do.
Yes, systems do fail, but
Best to have different solutions, isn't it?
So I think some things here are, given that you should not do them. So you should not mix prices of BTC USD and BTC USDT.
Yeah.
That is just plain outright incorrect. And, that kind of restricts a lot of opportunities on cash future arbitrage and true price discovery. So that is something, and that will create issues on the settlement side. So that one should not do. Taking price from top and most liquid exchanges, that's a good idea. That is something that one should do. Now, every exchange can have their own weights. And ideally, there should be a good methodology for using the weights as well. Weights are defined as per the volume traded on each of these exchanges in last 24 hours or last 30 days. There can be slight difference in compositions, but overall, I would think that the methodology it doesn't need to be same, but when you do it, the outcome will be like, it's not very different for different exchanges. And I personally don't see a lot of problem if more than one exchanges are using the same kind of underlying. Off the top of my head, I don't see much issues there.
Okay.
So why is the industry so binary? I kind of know the answer, but why do so few spot exchanges why don't spot exchanges do derivatives? I think for our case, it's primarily regulatory. Because we take cash, we've got a big building in Taipei, right across from the regulators. We're really sensitive to things that they clearly, don't want unlicensed financial services providers doing, right? So other than that, like technically, what is more difficult about a derivatives exchange than a spot exchange?
So when it comes to, of course, it's a whole different realm in terms of regulation and other things. And if anyone has fiat and they also have derivatives, then it's a whole new ballgame, whole different ballgame. But if you look at derivatives alone, then then also it's complicated to build. It's not that straightforward, and the complexity increases as you add more and more scale to it.
Yeah.
So building a system for one underlying is one thing. Building a system that can support 30 underlyings or 100 underlyings, which means 100 coins, is a whole different ballgame. And now settlement on one wallet is still okay. If you trade, so let's look at Bybit. If you trade Bitcoin futures on Bybit, you'll have to bring Bitcoin. If you look at trade Ethereum futures, you'll have to bring Ethereum, and so on and so forth. This is the same with Deribit as well. Now, this is not scalable, right? But it's easy to build. If you want to give a single wallet 30 or 50 underlyings, everything at a very high leverage, and then everything being super volatile, no circuit breakers, 24/7 trading, the complexity just increases multifold. And then creating the right kind of underlyings, it's a lot more detailed work than it seems to be. So I think there's been a lot of derivative exchanges that have come up in the last 12 to 18 months, and we will see a few incidences in the industry, and over time people will realize that there's a lot more detail that goes into building a derivatives exchange. So let's take a simple example. If I have a spot exchange, what it needs to support is a buy and a sell, right? So buying is very simple for an exchange. They just need to check that if the customer has enough balance of the asset that they are using to pay with. And if they have enough balances and if there's enough quantity available on sale, then there's a matching that happens. Once a trade happens, there's nothing to do with this trade. This trade is now history, right? There's no reason to look at it again. if you do the same trade in derivatives, it opens up a long position. Now, once you have opened up a long position and you have opened up a short position, you have to continuously margin those positions.
Mm-hmm.
You have to make sure that each of these positions have enough margin. And now let's say your customer goes and takes another position. So now this person has two positions and he has same wallet. Both of these positions will be requiring margin for the same wallet. And when you go on liquidating, which one will you liquidate first, right? So if you have 30 positions, you have a bunch of this complexity that opens up. So every position that is housed is being margined with every single tick in every single asset. So that is where it becomes a lot more complicated. And that is where it becomes a lot more complicated on the tech side. A spot exchange is only doing a matching. There is no risk management in place except for, broader risk management, like person should have enough funds and those things. A derivatives exchange is all about risk management. Matching is the easiest part. I mean, it's of the things we are talking about, it's the easiest part. You can build systems that can support microsecond matching. But if you have to build systems that can do risk checks over the number of customers that you have, and as your customer scale, as your underlying scale, then it just starts to put a lot more load on your systems.
Okay, what about the institutional entrance into the space, like the CME and BAKT? Do you think those guys have been successful, or are those been kind of? I mean, BAKT got a lot of criticism early on. The volumes were slow to pick up. They were all right for a while. Yesterday they had news that they're teaming up to do BAKT Cash, so it looks like maybe they're pivoting to do payments, or maybe that's part of the original plan. I'm not sure. How have those guys performed in your opinion?
Sorry, who was that?
CME and BAKT.
Oh yeah.
Yeah.
So there were three players in this space, right? If you remember, there was CME, there was CBOE, and then there was BAKT that came in later. CBOE shut shop on Bitcoin futures way back in I think January 19 or Feb 19.
Yeah.
So clearly they saw that this is not an opportunity in the bear market for them. CME has been.
I kind of felt the same at that point. I was stuck.
So yes, CME and BAKT have been offering futures, but the volumes. Look at the volumes there versus the volumes on other exchanges, right? There's a $1 billion versus a few $1 million. My guess is there are very few players on CME and BAKT, and those players are institutional in nature, but they are doing things like cash future arbitrages.
Mm-hmm.
They are not taking too much risk. They are not taking directional risk on Bitcoin futures as much. They might be taking some, but my guess is most of those volumes are cash future arbitrage volumes. And I haven't seen the details of BAKT, but I remember CME very clearly. One contract was about $50,000. I think they reduced it to maybe 25,000, but it is still very big for a retailer, right?
Yeah.
On Delta, one contract is $1. On BitMEX, it's $1. So on CME, it is way too big. Margin required is 44%, which means $12,500 of margin, or let's say $12,000 of margin. Market closes every day, so the positions are not accessible for some time.
And it's closed on a weekend.
It's closed on a weekend, so positions are not accessible. So, and that is why the margin requirement is so high, that less liquidations. So I think those volumes, will take time to scale with this kind of method. And anyone who's taking a risk position might want to close their position when the market is not available. Mm-hmm. So unless you are doing a cash future arbitrage and you know that, look, it's not going to bother you that much. If you're long spot and short the futures contract, and chances that market moves more than 45% in hours which are not functional are very slim.
Yeah.
So
what about the difference between cash and physical settled? Does that matter at all? Or it feels a little bit like not that important. Is that a big deal?
Yeah, there was a time when everyone was writing about it, right?
Yes. Yeah.
Yeah. So again, it was one of those things that, novelty kind of attracts us and says, okay, physically settled, that's going to change a lot. But it doesn't happen. And the narrative sold there was that it helps in price manipulation. Mm-hmm. But if that were the case, why would most of the contracts globally on equities, on commodities be cash settled, right?
Yeah.
So most of the contracts are cash settled. Even BAKT is now cash settled for I think quite a few of their contracts, and physically settled futures preventing manipulations. I personally never saw the logic in it, but yeah, I think the market has also spoken that there is not much demand for those. I understand why BAKT or a CME or a big exchange like that will be pushing those because it helps in coming. Okay, when you're doing physically settled futures, you're also charging for custody. And custody is a lot more lucrative business than commissions, right?
Yeah.
So 3% versus 30 basis points or 3 basis points. So yes, it's something that you definitely want to push. That we'll do physically settled futures, and here is our company which also does custody, and we are the best custodians, and we charge 3%. So I think that was an angle there. So that's the reason people were pushing. Beyond that, I really don't see much value in physically settled futures. If it were physically settled derivatives, make sense where the underlying is non-fungible. As in, let's take a crude example. If you are McDonald's and you buy a certain grade of potatoes, you only want those potatoes to make your fries, right? It will be, I mean, a cash settled derivative on that contract might not work for you because if you don't get those potatoes, your business is in danger. Not in danger, but yeah, your sales are at least in trouble. There it makes sense to have those kind of products. Otherwise, physically settled futures are basically, in my opinion, they were a bit of a marketing gimmick. So.
Bit of a bait and switch. So what about other stuff? Like there's a lot of interesting stuff in our space that I think could, that you guys have probably looked at that we've certainly discussed before. Two that come to mind are like a DeFi stuff, like aggregated yields of something like USDC or something like that. And also hash rate, especially around the halving. That's such a key input for miners. And after this halving, miners are looking for we've already seen a big cut. I don't know if you've seen the 7-day hash rate today. It tanked. Right. So it looks like a lot of those guys running S9s. Which
How much was it down?
It went from 120 E to around 82 right now. The 120 was the peak. Right. So that's just in a couple of days, right? So for some of those miners, like Pankaj said, they're leveraged like crazy.
Yeah.
Running these old S9s, right? Just you just hear them screaming away. And they're probably like, I think people think they're like 40% of hash rate. And that's why you see that drop because they're turning them off now. But so this is futures can be used for more than just speculation.
Oh yeah, absolutely. No, hash rate futures is something that I'm sure we are going to see sooner or later. It's just that any market maker there will also need to hedge themselves in some fashion or another. So it has to be driven by the miners. I think for an exchange, it's a fairly easy product to launch. But without the support of miners, it's generally going to be a little tricky. Market makers in these things are, I think, at this point in time, still difficult to find.
Okay.
Secondly, it's just that I think there's a lot of there's a bias in the system that the price will go up, and of course, there's a reason for that. But we still don't look at Bitcoin as an asset and yielding quarterly returns and annual returns. We don't subject Bitcoin to the same kind of report card that we do for other equities. Like equities, we look at annual performance, right? We all know that stocks are going to go up, but we still look at annual performance, quarterly performance. For Bitcoin, we still don't do that, and that bias carries across the supply chain. It carries to the end customer, to the funds, to retailer, to miners, the supplier. And that is why, we've seen less of these kind of products, that hedging hash rate and others.
Yeah.
But yeah, as the space becomes more and more sophisticated, these risks will become real and people will look for hedging solutions on those.
Yeah.
You have a lot of, can you hear me or am I?
Yes.
Yeah.
Good.
Okay. You've got a lot of analytics on your platform.
Yes.
And I think when you started your analytics page, it was probably way ahead of anyone else. So my question there is, there's a lot of data on there. for the traders out there, for those guys that are looking at your platform and wondering, what sort of unique stuff you've got on there. What are some of the indicators on there that you think are the most useful for traders, and for you as a trader swinging things around? What do you what do you think is most reliable? The most reliable, say, just 2 or 3 indicators that people should be paying attention to.
Yes. So we have a bunch of dashboards, but I think most people look at liquidation data, which very closely. So whenever there are liquidations happening, you can see in real time that how much of the OI has gotten liquidated, and that can give you a sense of how big the move is, how much of it is more to come. It just that it gives you the sense of.
So is that a backward looking, almost like I've been looking to get long, but I'm kind of waiting for a bit more of a capitulation. Okay, there's 150 million there, closed out longs. Now seems like a good time. Or, I mean, how do you, is this, I know it's not an exact science, but how do you kind of use that?
So just looking at liquidation data is not sufficient. You will have to look at the OI data in tandem with it, right? So if you know the level of OI in the market, and if you see the speed at which the liquidations are happening, then you can get some sense of, you can get some forward information. And of course, it's going to be speculative, but it's very powerful because it's momentum driven. So
and
it usually
your data feeds are using BitMEX for a lot of that stuff, I guess.
Yes.
So,
yes.
And so what percentage, so when you say the size of the outstanding interest, can you give us a sense of what percentage BitMEX you think is right now?
I'm sorry.
So if BitMEX has $1 billion of OI,
yes.
What is the total OI, including at other places? I mean, is BitMEX 90% of the universe, 80%, or is it? Are you not sure?
So my sense is BitMEX will be about at definitely more than 75% of the universe. Won't be surprised if it is about 90%.
Wow.
Yeah, I think derivatives started to become significant, and it is recently significant. But I think BitMEX OI is still much bigger than the rest of the venues.
Arthur always looks happy.
Is BitMEX more very happy, isn't he? Is BitMEX just more transparent with their data? Is that why we use it? Like, for example, I always notice, or maybe I do. I always use Bitfinex long shorts. I don't really know why.
Yes.
I don't know why I use Bitfinex long shorts. I do, but and we all use BitMEX for OI. But is it because these people are more transparent, or that just the other exchanges don't allow the data, or what's the deal there?
No, I think other exchanges allow the data. I think Deribit allows data now on liquidations, and they've allowed for some time. They allow data on OI. It's just that, for analytics, we started with BitMEX data only. We don't even include our data in it because, it is much smaller. And for a customer who's objectively looking at market insights, Delta's volume is still small for them to get biased with. I think derivatives volume now are good and they should be included. We are looking to include them, but it's just that talking to people, we have realized that the trust in data is still with BitMEX. That
right.
People might not trust there's a lot of chirp in the community about the practices, and I personally don't have any comment there, but yeah, people look at their data, and that's why we also include their data. Same with Bitfinex long short data. A lot of people look at it, and that was my another, so you asked me about the dashboards that are popular, right? And are worth looking at.
I like the market setup as well. Yeah.
Yes, that is that's a good one too. So liquidations data, interest rate data on Bitfinex is very informative. Where is the borrow rate currently for Bitcoin?
And can you explain the borrow rate? Yeah, can you just, I've heard people talk a lot about that, and when it goes negative, it's time to buy or something. Can you give us a bit more color on just on that, just quickly?
So Bitcoin borrowing on Bitfinex would basically, so in any margin trading market, right? What you do is you borrow and short. So if you see that opportunity is more than is very lucrative, if you see that something is a good short, then you are willing to borrow more and more, and you're willing to pay a higher rate for borrow. And Bitfinex flash rate is driven by demand and supply. So when there are more borrowers, the rate goes up. So by looking at the rate, you can see how much is the leverage in the system and how aggressively are people looking to borrow Bitcoins. Because there is no reason to borrow unless you are going to actually short the asset. Because otherwise, in the financial market, there's no real use of borrow other than shorting.
Yeah.
So yeah, if the rate spikes, then you can be sure that look, the borrow has increased. And remember, a few months back, Bitfinex was at about 5 to 7% premium to every other exchange. Price was 7,500 on other exchanges. Bitfinex was about 8,300. That time, interest rates on Bitfinex for Bitcoin went up from about 2% per annum to as high as 30% per annum.
I remember that.
Because people were borrowing on Bitfinex and selling on Bitfinex because it was at premium, and they would have been buying Bitcoin somewhere else. So, and that is again, adds to my point of, at that time, what happened? Bitfinex had closed its fiat gateway, so money could not come in.
Some small cash flow issues.
Yes. So
Nothing
yes,
again,
at that time, you should not use Bitfinex BTC USD price in your index because it will create a false price and you will liquidate participants at a wrong price.
Yeah.
So again, that borrow data is quite important. Open interest data is again very important. Open interest of $1 billion, open interest of 850 million, 600 million. It just tells you how much leverage is there in the system. Right now, the leverage we see in the system is about, last I checked, it was about $400 million, which is much lower than where it used to be for like 12 months back.
Yeah, I can imagine.
So you said that was as low as what, July 19, or was it before then? Yeah.
Around that level. So a lot of it has been cleaned out. That means the system is a lot more lighter now. And I don't expect a big crash in Bitcoin now. Even if, equity markets fall, even if equity, there's another big shock. And I think equity markets will reel under the pressure of this coronavirus for some time because of earnings.
That's what we saw. I mean, God, today at least, right? As we saw, kind of negative move in global markets, and then Bitcoin at least was fairly resilient.
But yesterday evening as well, right? Markets at open, US open, the stocks were down, and Bitcoin had a small bounce, tiny bounce, $50 or something. But yeah, there was a.
That's kind of what I was thinking. Like I was thinking,
flat is the new up, right?
Yes.
Yeah, we've been talking about the correlation with Bitcoin and US equities, especially recently. But if you take that time, and the farther you drag it out, the less correlation there is. And I think the reason for that is the market participants are so different, right? So only very recently we've had more institutional money in this space. And I think we've seen those guys largely puke over the last week. Like those people who are selling gold, we're selling Bitcoin. There's we're selling US markets. Those guys were I think those are the guys that we're selling. And the guys that are, been in Bitcoin longer term, I think those guys are kind of a little bit, a different mentality than other markets.
Do you think some of those hedge funds that have been named on the Twitter sphere, those three hedge funds, do you think it's possible that if they were running risk parity books, that they could have had some Bitcoin in those portfolios, knowing the names of I don't want to mention them on the podcast, but knowing, I think we all know who they are. So Pankaj, do you think those people could have had Bitcoin in their books?
I think they would. I think anybody who's running a risk parity portfolio will have certain percentage of Bitcoin in their portfolio. Even otherwise, I think hedge funds, the ones that have decent amount of prop money, the decision making there is quite centralized, and I won't be surprised if there's Bitcoin in the portfolio.
Yeah.
So
one of those three then that was dumping everything to that was deleveraging would probably have had a hugely adverse impact, right? I mean, if you're selling a market, if you're trying to sell even $50 million at market over a space of 24 hours, that's a lot of supply.
But then again, this is what is surprising, right? I mean, if we have markets which are quoting 700 million daily traded volume on Binance and 300 million on Coinbase, and 700 million, another 500 million on Kobe. And then if we have 100 billion of outstanding market capitalization, if we have $20 billion of trading, let's say real trading is about $3 billion. If we can't absorb 50 million, then something is off somewhere, right? So that's what I don't understand.
It's almost as if the data's not. It's almost as if it's made up.
Yeah, I mean, look, the price is real. So Bitcoin market cap has no question, right? So that data we don't need to talk about.
And if there really was a billion, if there really was so many billions of dollars of liquidity in the market, then why do the OTC desks seem to struggle with like $5 million or $1 million? Like, oh crap, $5 million? No way. I'm going to price that one wide.
But
like,
part of that too is it's so fragmented, right? Like there's thousands of exchanges. So maybe that's part of it. Like I know that the daily volume is not 100% accurate, but a lot of it is definitely because it's so fragmented, right? It trades on so many different exchanges, and clearly CoinMarketCap does not know how to calculate derivatives market volume, right? It's just like
we've been they're just starting in derivatives, and I think
You're me.
Yeah, we are going to get listed on CMC. So
nice.
Good. But yeah, but Jesse, to your point, I mean, think about this, right?
Yeah.
Yes, it's very fragmented. So let's leave the $20 billion volume out of picture. Let's just say that the real volume is $1 billion. Is 50 million big to absorb? If there are 3 hedge funds, they have $50 million position each, they are dumping. And first of all, why are they dumping when the price is 40% down? Let's say the price comes 40% down because of their dumping, then that's like $115 million. If you're about $500 million as well, then also it's just 30% of the market daily liquidity. So I really don't understand how this small amount of selling creates such big pressure on the market.
I think there are times where I mean, it's psychologically, people, when the market's shut at 4 o'clock in the US, it's markets are shut, done. Most people are not looking at the screens until they're looking at London. Obviously, they're looking out. They're looking how Asia's going to open and how Tokyo or Australia, New Zealand, but they're kind of switched off, right? I mean, once you're done in the US, you got a break. So if you then have people trying to sell in that window of time where the US is sort of late afternoon going into early Asia, I think trying to sell anything at that point, there's just not a lot of eyes on it. So that I can see windows of time through the day where $50 million could have a big impact, but maybe not within normal operating hours.
So yes, that is there.
Which people can use to their advantage, obviously, as well, as much as it is a disadvantage. But a lot of people use that to their advantage. Yeah.
So Bitstamp case that happened in about I don't remember. I think it was
I was just thinking about that.
Yeah, that case, it was classic. It was right after US close, and it was a time when the markets are generally quite slim before Asia open, after US close. And that's a window of the lean window. When US opens, there's a lot of volatility. When Europe opens, there's a lot of volatility. When Asia opens, there's a lot of volatility. You can see that in the price. If you want to identify when the big moves come, they come one of these 3 times. In fact, they come either at US Open or at Asia Open. They rarely come at Europe Open. And
they're a sleepy bunch over there. Takes more.
They're all sick right now.
Yeah,
well,
it's
nice.
Yeah. So after US close and before Asia Open, there's a slim window, and in that time, yes, there's the Bitstamp case was a classic case. That was the time that was used to kind of put pressure on spot.
Yeah.
Again, a classic case on why index design is important.
Yes.
That day as well, prices were divergent between BitMEX and Kraken, and one of the exchanges, Bitstamp should have been excluded, which caused the price to collapse, and the spread.
It was just a couple
really
$1 million too, if I remember right.
Yeah, it was concerted selling, but yeah, it was not very big in size.
So without giving away too much of the secret sauce here, how does Delta take over the world? How do you guys knock out BitMEX and become the biggest player in the derivatives space?
So we've been, like I said in the beginning, we focus a lot on the financial product that we offer. We focus a lot on offering different kind of products, right? We've brought multiple altcoins. We've been first at bringing, like I was saying, BNB futures, Leo futures, futures in Tezos. They were listed for the longest time only on Delta. We've spent time to build a trading engine that can support 100 altcoins. So when the market rallies and people want to take more and more positions on altcoin futures, we will have a huge advantage over other exchanges. It's just that we have invested that much in technology. And we have an advantage there as well because our CTO, Saurabh, who's also our co-founder, he comes from the experience of building for huge scale. So
this is a great statistic. The statistic you're about to share, I think, is a great one. Because I think Westerners aren't familiar with the platform's called Hotstar, right?
Yes.
Yeah, we're not familiar with that, but it's like, how many users does it have? It's more than Netflix and...
Yeah. It's more than Netflix, Amazon Prime, and Hulu put together. It has about 400 to 450 million subscribers. And that's just a huge number, right? And it's been last 10 years in India has been an era of telephony and has been an era of cheap data. So everyone has a cell phone and everyone is streaming data continuously on their cell phones. So mobile penetration is huge, and Hotstar is a mobile app that people use to watch TV and cricket matches live. Cricket is huge in India.
So when you keep cutting out, that's because people are watching the cricket. Is that right? Just seems like we're suffering sometimes with a bit of bandwidth problems with you, but yeah, I guess just blame it on the cricket. Although is the cricket cancelled in India right now or not?
Yeah, right now we have this season IPL coming up, right? That's Indian Premier League for cricket, and it's the biggest event in cricket now, and happens in India every March, April, and they're looking to cancel it for this season. And Hotstar paid like $2 billion, $1 billion or $2 billion for the rights on showing IPL matches.
What about the Olympics?
Well, Olympics.
What's going to happen there?
Definitely cancel, isn't it? I mean, the virus in you guys. I mean, I don't like to make, but yeah, it seems quite quiet. Is that a reality? Like, is it all this bathing in ox feces, whatever I keep seeing on the internet, or you're drinking cow urine or something? I don't know. There's so many things on India, and I keep getting all these tweets from India saying that this is what's making us strong.
So look, I cow urine. Don't try that.
Is that how you start the day?
No. I don't know anyone who starts their day like that. But yeah, I mean, there are some people who have a particular.
I mean, if it works, send some over.
So is India one of these examples of if you're not testing it, there's no cases, or is it just because of the climate? I think there's some correlation between climate and cases.
I think so. First of all, I think in these kind of diseases, they follow a trajectory in every region, right? So different countries are at different stages. Now, India is just not at that stage. We are still at stage 2, which is where the community transmission is not happening, and because we had enough examples from China, from US, from Europe, so government was early to react to. So I'm at home right now. We are all working from homes. Public places have been shut. Cinema halls have been shut. There are like 200 reported cases, and the level of alertness is way too high. In my building downstairs, if anybody comes in, they are given a hand sanitizer to first clean their hands. Then there's government officials who are checking that if any building has more than 4 or 5 people who are sick, they are looking to quarantine buildings. At least that's an order. Nothing has happened as of now.
Yeah, so I think Taiwan's the exact same.
Yeah, Taiwan as well, right? Reacted very fast, and though it has such close proximity and exchange with China, we didn't have much of disease spread there.
SARS was a big deal here. Like I was here, Dan was here as well in 2003, and it was a big deal, and people were very, very scared, and the government messed up on it, just like the West is messing up right now. And there was people, bowing on stage, looking for forgiveness from the people and that kind of stuff. So they got, scared shitless, and they put a plan together. And when this thing started to break, I was just talking to a guy, and he said that his sister works at one of the hospitals, and he said they were talking about it in like late December. So some of those plans are rolling out like real fast. And so we've just been on lockdown. They've really strict penalties on people who break quarantines. Like if you break a quarantine, you get 2 years, I think it's 2 years in jail or a $60,000 US fine. So they're not messing around. Yeah.
So it's the same in India. I think the government has been proactive to react. And I think India is aware of its weaknesses, that, okay, the level of hygiene is low. There's a billion people out there. So whenever there is these kind of events, which can be epidemics, which can be diseases that spread very fast, generally the government is very fast to react to, because it can take a shape of a disaster very quick here.
As we're seeing.
So generally we've been very good we've maybe not so good in, average level of hygiene and others, primarily because of the people, the pollution and other things. But yeah, disaster management has been, crisis management has been really good.
So the other thing I wanted to talk about, just to wrap
your
things
microphone's
up,
gone funny.
Yeah.
You've gone like a. I've got one question for you.
There we go.
In the spot markets, we've had it's a quick one really. In the spot markets, we've had a lot of of the guard in the leaderboard of exchanges, and sometimes I wake up and I don't even know 4 in the top 5. Suddenly someone appears with $2.5 billion, but that's by the by. My question is, do you think we'll see some changing in the guard in the derivative space over the next 6-12 months? And why do you think so far there hasn't been that? Is it just because it's still too early to?
So it's still early, it's still changing. But yeah, I think over the last 6-8 months, there have been new names people have started to identify with, right? I mean, Binance Futures has come in and they are reporting $1 billion of volume. Bybit is reporting volumes. FTX is reporting volumes. There are other players who are reporting volumes. And there are a bunch of exchanges now. It's a space, and, generally we know in our space, it's very difficult to comment on volumes. How much of those volumes are actually retail? How much of those are OTC? How much of those are real? There's a question around all these things. And I think when you have $1 billion of volume, when you have OI of 500 million, 600 million, you run into situations like we saw on BitMEX. You run into situations like we saw on deriv. And those are big volumes. And like we discussed earlier on the call, they had to kind of shut down their volumes by will or unwillingly, whatever. BitMEX was becoming the biggest seller on street, and they were selling their market down. So they either put the circuit on their own or they got attacked, and whatever happened there, market closing at that time was good. I'm a little surprised that these kind of situations did not arise at other exchanges, which have such high OI levels. So
So maybe final question here. What's going on with crypto in India? So I feel like India has been like a sleeping giant in the space, because you've got, a huge population. You've got a lot of smart tech savvy people. You've got strong natural demand for gold. So that argument should be like a good pitch in India. But we've had this kind of regulatory overhang for years and years and years. And it looks like it's starting to break now. One of the good signs is I saw Binance last year or earlier this year made an acquisition of an exchange. And now they're setting up a crypto or a blockchain fund as well. And some good news out of the regulators. So what's going on in India?
So, so India was late to joining the crypto party and I'm talking about 2016, 2017. 2016, there was still only pockets of tech savvy people who were into cryptos. 2017 is when masses started to get inducted to cryptocurrency. And towards the last part of second half of 2017 is when we saw good activity in crypto buying against fiat, Indian fiat, INR. 2018 is when RBI came out and basically imposed a ban on all the banks, and they stopped banks from providing fiat services to to crypto companies. So anybody who was running a crypto business could not get a bank account, could not get a payment gateway. Now, payment gateway is what you need to accept payments from customers and then again release Bitcoin to them. So that bridge got killed, and that kind of stopped participation from the retail. But more than that, it did a psychological damage to to the people.
Perception.
Yes, perception went really bad. A, markets were falling. B, people started to think of Bitcoin as illegal, and there were reports on that the headline would typically be RBI bans cryptocurrency, Bitcoin is illegal in India, and finance ministers said that Bitcoin is not a legal tender, which is very different from Bitcoin is illegal. Legal tender means what you can. It's not a form of money. So it's just that nobody really took the mandate to explain this to people, and the way markets were falling, there was little reception on the customer side as well. That industry, our industry in India for the fiat to crypto, that kind of got killed completely. Mm-hmm. And it's only now that Supreme Court has kind of given a directive to RBI that look, this measure that you have taken is a bit draconian in the sense that it's a little overreaching. So now they've asked them to kind of provide banking services to anybody who wants to run a crypto business. That is on paper. When you go to the companies and those who are giving fiat, when you talk to them, they still haven't got their Bitcoin, got their bank account sorted. Mm-hmm. So yeah, it will be some time when the recovery happens, and it will again be a demand-driven recovery. See, just because banking is available doesn't mean that there is a lot of flow, right? Doesn't mean that customers suddenly want to buy Bitcoin.
Yeah, I've noticed that.
Yeah. So yes, I mean, now the gate is open at least. If they want, they can buy. But yeah, there needs to be a bull run for market to get excited. And market was getting excited before the whole coronavirus thing happened. There was a big catalyst in terms of halving, and I thought that would kind of trigger. It will kind of catapult Bitcoin out of the overhang of 2018 collapse. So yeah, I think bear market is going to prolong a little more now, which means that the flows are going to be a little stretched out, maybe towards the end of this year, early next year. And only when flows start to come in, will more flows come in. And again, it's more of a circular and a spiral whirlpool kind of effect, that people make money, they tell their friends, they make money, there is more demand, and that's how demand picks up. At least the gates are open now.
Yeah, I mean, but I remember looking at that technical analyst on Twitter at Dav the Wave, and
Dave the Wave. Do you say Dav the Wave?
Well, actually, it's not Dave. It's at Dav. It's DAVTHE. So it's not actually
Dave was taken, right? He's like, oh, I'll just be DAV.
It's not even his name. Anyway, but he's one of the most accurate, I think, during the whole downturn. And I've always had this problem with the idea that, that maybe the peak isn't until 2022 or beginning of 2023. And I'm like, how could that happen? We've got the halving this year. We're definitely at 30,000 by Christmas. This is me sort of 4 weeks ago. And now I'm thinking, well, maybe we're at 5,000 by Christmas, and then maybe this is a 2021 story. So it does feel like it's been pushed out, but maybe it was always supposed to be that way. Something tells me that he's right, that these cycles get longer, and maybe we've just been, we're overly bearish, but actually where the price is, it seems like it's still within his range. It's still within the
stock to flow. Like it hasn't blown out of that either, right? So
no.
And I quite like that model because it's very intuitive. Like it just seems to make sense that as supply decreases and demand is the same, price should go up, right? So it'll be interesting to see how that plays out, because that's predicting by December we should be at 33,000, right? That's the implied price. So I mean, obviously he's got a band around that.
Yeah, I guess it trades at really deep band, wide bands around that. Yeah.
Yeah.
So.
I'll be happy if it's here.
Yeah, 33,000 will be nice.
No, I mean, I'd be happy with like 5,000. Just stay where you are. Just don't go down. I know no
I
more of
think,
this. Bitcoin go up. Just Bitcoin don't go down.
yeah, so this is exactly what I was saying, right? That the sentiment has changed, and now if the price holds, that's a good day.
Yeah.
And for any asset class, if you're not down 10%, that's a good day. I mean,
And
I
bear in
don't
mind
think.
that the dollar's trading at like some near all-time highs versus the
Yeah,
Dixie.
absolutely.
So
Yeah,
it and the dollar's been screaming the last few days. Every
Yeah.
time the dollar's screaming, this thing should be going down.
Yeah. No, it's true.
irrespective of what everything else is, the fact that equities are selling off. It's discounted a lot of that. It seems to discounted everything right now, to be fair.
yeah.
Yeah.
And that's the thing, right? We don't still know the impact of this. Maybe there is a lot more downside left. Maybe we are overreacting to this. But it's very difficult to comment till we have more data. If something like what's going on in Europe starts to happen in US, that the cases keep multiplying like this, then we might have a lot more downside to cover, at least on the equities front. And if if the lockdowns help, and if the disease doesn't spread as fast, or if the virus doesn't spread that fast, then we might have been already pricing in a lot of the downside.
Yeah, I mean,
But
I guess my last comment would be like, having lived through 08, all I remember was there were periods of time where a lot, so much, like, it seemed to be like years of stuff used to happen
Yeah.
within the space of a few days. And then there were months where all you had was uncertainty, but really nothing happening. And you'd have these wild swings where the market would go up, 15, 20%, and then it would go down again. So I think the market gets used to having this at the moment we're in that period where every day is a new crazy headline. And then we've got that period where really nothing happens. People are working on the fix, particularly not just central bankers, but all sorts of, people trying to work out how to restructure some of this, this debt. Who knows what else is going to break in the system. And that will just take months. So it's just, yeah, you've got a long slog after the dopamine hit that you've just had in
yeah,
in the last
yeah,
week.
it's not going to just come and go away. It's going to stay here for some time. I mean,
Yeah.
the damage that has happened, it's not like we'll snap out of it immediately. It'll take some time for us to recover.
Yeah, it's not a V shape, is it? This one,
Yeah.
I don't
No.
think.
I wanted to end on a cheery note. Thanks, guys.
No, there is for Bitcoin it might be positive, right? Because look how much of it can only go down very
It
little.
only go
from
up.
Yeah, let's just stay with not going down. Okay,
Yeah.
so I don't see a lot of fresh shorting coming in. I don't think there's much to be made by shorting Bitcoin here, right? Most people those who would have been short would look to cover their shorts. There's a good gain that has been made, and it's going to stay volatile. So usually
If you don't sell a down 60% move, I mean, surely the people that are left are just the diehards who just think that the optionality of having a digital currency that sits outside of the system, it's worth holding, even if it goes to zero. We've lost so much value already. What does it even matter anymore? The point is that you've still got this thing. You're still part of this revolution that could be the answer. And even if it's not the answer, it's still going to be the answer for some people, because it's still working and it's not broken. And so I think there's lots of optimism.
No, and it'll be it'll be very interesting times, because how governments react, and what kind of shape does economy take, what kind of shape does demand curve actually realize, how governments react to that. Do people like that reaction? Does printing money help? Because what kind of impact does it have on inflation? This is going to be a real test for a lot of fiat currencies out there, and also for Bitcoin. And it might be that people start to realize that, look, it's good to have some portion of Bitcoin in your portfolio, because the amount of easing that we did in 08 crisis, and the amount of easing that we have already done with this crisis.
Yeah, it's insane, isn't it?
Right? 700 billion. It took Paulson so long to get that through with the Senate and everyone. And this one, middle of the night, you are seeing prices on a Sunday you see 700 billion announced, and then followed by another
The market
500 billion.
dumps.
Yeah,
Yeah.
yeah.
But
And
it's
market
like
is
we're
not
living in
reacting to that at all. So
Yeah.
it's like we're living in a fucking movie, disaster movie right now. It's like
yes,
it never ends.
yes.
That's the one positive, is that I no longer have to watch Netflix and watch some shitty TV show. I can just watch the headlines and get. It's just like crazy. I can't get off Twitter. It's like I must be.
Yeah,
I don't
absolutely.
even look at my statistics because I have a feeling I've been assimilated by Twitter. I've almost become part of it.
No, absolutely. And you know,
Scary.
by the
No.
way, guys, price is 5,500, I think, as of now on BTC USDT Binance. So that's positive, Jesse. When we
Yes.
started, it was 54.50.
Oh yeah.
If we
Very
keep going
good.
up at this rate, that's not so
Baby
bad.
steps. Baby steps. Yeah.
Yeah.
All right, that
one at a
sounds good,
time.
guys. Let's wrap it up here. That was a really good conversation. Good talking to both of you. I think we should do this again for sure.
Yeah, we should do this every month or something.
Yeah,
Should be good.
definitely.
Yeah.
All right, okay, guys.
All right.
You could do a shorter 30-minute, recap of what's been happening, what you've been seeing,
Yeah, we can
Yeah,
do a
let's
24-hour grinder. We could just do like.
we have to work as well, guys.
We have little cameras on our heads.
Yeah.
Just walking around.
All right.
All right, have a good one.
Thanks a lot, guys. Take care.
Stay safe.
Cheers,
Healthy.
guys.
Yeah.
Bye.
Bye-bye.
Bye-bye.